Welcome back to the TQQQ Challenge. It's June 19, 2025, and while the stock market is closed today for the holiday, we have some major developments to discuss. Since our last update, my TQQQ portfolio has grown from $2,400 in gains to nearly $4,000 in unrealized profits. But more importantly, we might be seeing a golden cross formation as early as next week. If you're new here, hit that subscribe button because I share monthly updates on my journey to turn modest investments into significant wealth through disciplined TQQQ investing. Let's start with where we are today. TQQQ is trading at approximately $73, up from last month's level of $69. To put this in perspective, TQQQ hit an all-time high of $93 on December 16, 2024. It then dropped to $73 on January 13, 2025. Before rebounding to $91 on February 18. However, the 2 months leading up to April 9 were brutal. In response to President Trump's aggressive tariff announcements, TQQQ plunged all the way down to $35 on April 7. But once the 90-day tariff pause was announced, TQQQ made a full recovery, climbing back to $73. Even with this sharp rebound, market volatility remains elevated, and conditions will likely stay turbulent until we get more clarity on trade policy. Since TQQQ tracks 3 times the daily performance of QQQ, it's crucial to understand what's happening with the Nasdaq 100. We've experienced some of the most dramatic swings in recent memory. For the first time since the Golden Cross formation in March 2023, QQQ fell below its 200-day simple moving average, the green line on our chart. Historically, this 200-day moving average has acted as strong support during bull markets. Over the past 2 years, QQQ approached this green line twice. Once in October 2023 when it bounced right off, and again in August 2024 when it briefly touched and rebounded. But this time was different. QQQ broke through decisively. In early April, QQQ dropped from its all-time high of $540 on February 19, 2025, to a low of $402 on April 7. That's a 25% decline in just over 6 weeks. At that time, I outlined 3 possible scenarios: the 2018 market correction, the COVID crash of March 2020, and the broader bear market of 2022. Among these, QQQ appears to be following the 2018 correction most closely. Let me walk you through what happened in 2018. That correction lasted from October through December and was driven by escalating trade tensions as President Trump initiated a tariff war with China. During that period, QQQ fell 25% from $188 on October 1 to $142 on December 24. After Christmas, the market began a steady recovery, and by April 2, 2019, QQQ had formed a golden cross. In 2018, QQQ made 2 failed attempts to reclaim the 200-day moving average before a death cross occurred on December 3. About 45 days after that death cross, QQQ rose above the 50-day purple line and finally broke back above the 200-day green line roughly 3 months later. The first attempt on February 6 failed, but QQQ succeeded on its second try later that month. Now, fast forward to 2025. On March 10, QQQ fell decisively below the 200-day green line, breaking the bullish trend that had been in place since early 2023. We saw the same 25% drop as in 2018. A death cross formed on April 11, 2025, mirroring the December 3, 2018 formation. QQQ then rose above the 50-day purple line, just as it did in 2018, but initially failed to get back over the 200-day green line. However, QQQ eventually crossed above it on the second attempt, again just like in 2018. If this historical pattern continues, we may see a golden cross formation possibly next week. As of today, QQQ has rebounded to $528, just 2% below its all-time high. QQQ is also above the 20-day black line, which suggests a bullish short-term trend. Recent market news shows that in June 2025, the Federal Reserve unanimously maintained its key overnight interest rate within the 4.25% to 4.5% range, citing significant uncertainty surrounding the economic impact of new tariffs. While the Fed still forecasts 2 quarter-point rate cuts for 2025, its updated economic projections reflect concerns about a potential stagflationary environment. They revised 2025 inflation forecasts upward to 3% from 2.7% and lowered GDP growth expectations to 1.4% from 1.7% due to anticipated tariff effects. According to the latest GDP Now forecast, U.S. GDP growth for Q2 2025 is projected at 3.4%, a significant improvement from the negative 0.3% contraction in Q1. The CME Fed Watch tool indicates the Federal Reserve will likely cut interest rates twice, once in September and again in December. Meanwhile, on Polymarket, the odds of a U.S. recession in 2025 have fallen from 66% on April 6 to 28% today. That's still higher than the 20% probability seen in January and February, but it shows improving sentiment. There are several reports showing that retail investors like you and me outperformed institutional investors in April and May 2025. Following the initial sell-off sparked by tariff announcements, retail investors quickly became net buyers, purchasing substantial amounts of U.S. equities. This buy-the-dip strategy resulted in retail investors purchasing a net $7.32 billion in stocks in 3 weeks and accumulating a record $150 billion in U.S. equities in the first 5 months of 2025. Conversely, institutional investors maintained a cautious stance, continuing to sell stocks even as the S&P 500 rallied. They sold $30.93 billion in April and an additional $50.78 billion in May, shifting capital towards safer assets. This meant institutions missed out on nearly 12% returns enjoyed by retail investors between early April and early May. Analysts at Barclays, J.P. Morgan Chase, and Deutsche Bank anticipate that institutional investors will increase their equity exposure in coming months, as they are considered remarkably underweight in their positions. Now let's review our portfolio performance. Since last month's update, I haven't added more TQQQ, keeping my total investment at approximately $20,000. Normally I invest about $1,000 monthly, but in March and April, I invested over $5,000 when the market dropped significantly, so I'm ahead of schedule. Since December 2023, my goal is to invest about $12,000 annually. I plan to invest $4,000 more by the end of November 2025 to reach a total of $24,000 by November 2025. I plan to buy near the 200-day green line, similar to June 3, 2019, when QQQ dropped near the 200-day line after a golden cross formed on April 2, 2019. My current position is 325 shares of TQQQ with an average cost basis of $61.39. The current value of my TQQQ portfolio is approximately $23,800, with a total unrealized gain of about $3,900, or 20%. For comparison, last month's return was 12% with a paper gain of $2,400. So, it's fantastic to see this kind of improvement. If you'd like more detail, check out our May 2025 TQQQ update video. I haven't sold any shares and don't plan to unless I see unmistakable signals pointing to an imminent market crash. If you want to learn about those signals, check out my videos titled 10-year minus 3-month spread, recession indicator and how to predict the stock market. The long-term strategy for the TQQQ challenge remains unchanged. Invest $360,000 over 30+ years and aim for multi-million-dollar growth. For the full explanation behind this approach, watch my video Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, 30-year showdown. I've also launched an investment simulation game on tqqqchallenge.com where you can test various strategies for TQQQ, SPY, QQQ, and QLD in different scenarios. Here are the 4 principles guiding this journey. First, monthly investing. Consistently putting $1,000 into TQQQ each month. Second, enhanced dollar cost averaging, or EDCA. Buying more during downturns and less during peaks. Third, sell before crashes, only exiting positions when major market crash signals emerge, with plans to buy back at lower prices. Fourth, no margin, avoiding debt to remain financially secure and minimize risk. The market is moving rapidly, driven by innovation and explosive growth in AI. Our mission is to stay focused, disciplined, and committed to the long-term strategy. Thank you for watching this month's update. If you found this analysis helpful, please like the video, subscribe to the channel, and hit the notification bell so you never miss an update. Your support brings energy and purpose to this challenge. Until next time, take care, stay focused, and happy investing.